Hello and happy Synthetic Friday. I'm Kevin Davitt, part of the Options Institute at SKEW Global Markets. And now the June monthly jobs data was pushed forward a day because of tomorrow's holiday, and it was another hot one. The estimates for today's headline number were wide, which indicates significant uncertainty around that number. The BLS jobs data showed a historic add of 4.77 million jobs last month. The unemployment rate is now down to 11.1%. Now, the S&P 500 futures pushed back up near the high end of its 2 or 3 week range, around 3165. There's arguably much more significant resistance around the 3200 level, if only because of that round number psychology. Now, looking at SIBO's SKEW Index, it's again measuring in the 140 range, which is relatively high historically speaking. If you look at 30 delta risk reversals out in August or September in the SPX, there is clearly still a bid for protection. Now, moving over to VIX and looking at the VIX Index, it's down about 2 handles today to 2670. 1 month SPX implied vols are now back near the level from the June jobs report on the 5th of last month, which is interesting. I realize it's somewhat of a faux pas, but from a technical perspective, the VIX Index is back very near its 200-day moving average. The last test of that level came following the June jobs data, and then the market reversed. Prior to that was February 19th, which was the all-time high for the S&P 500. The VIX futures curve is upward sloping out to October, which again remains that pivot point, that inflection. So we've got 2 straight strong jobs numbers and perhaps an economy on the mend. It'll be worth watching this trend as a number of states either pause or reverse their reopening efforts more recently. Coronavirus has defined the first half of 2020, and it may well do the same in the second half. Like all things, time will tell. Thanks for tuning in and enjoy your holiday weekend.